together. Kevin Green joins us. Look at the flows and the levels. KG seemed like we got pretty clearly rejected at basically the highs of the last 5 days, right?
Yeah, well, not only just the high of the last 5 days too, but that key 5650 level that we've been talking about, that positive gamma area, and we got really close to it, around 2 to 3 points away. And then we just saw, some selling activity. We utilized the 5630 area as an area of support. We saw a little bit of a consolidation, and then we just completely flushed to the downside here, and then coming in and actually crossing that 5600 level with pretty much any little resistance. And then we did get some buyers here coming in at around 5590, trading at around 5600 right now. You want to be able to be above that level at the time of the close here, Oliver. That's not going to be a good sign, but here's a cool thing to kind of note here. We have the histogram up when it comes to the volume for today. As we saw that slide to the downside, we actually did not see a significant amount of buying activity for puts going down below that 5590 strike. That is a good thing, right? There wasn't a lot of individuals that wanted to continue to bet that the market was going to move to the downside for now. Now, we did just get some flows in about maybe 5 minutes ago for the 5570s, but it wasn't something that was too aggressive, not like it was $1 million trade or anything of that nature, but something to kind of keep your eye out on. What I would suspect that we would see or may see going into the close is either a pen at this 5600 level, or we do try to ramp up because we have a significant amount of premium that's really kind of off sides at this point, and that's where we could have a melt up scenario taking place. If that's going to be the case, 5630 is going to be the area of resistance here in the near term. And once again, we've kind of talked about that several different times. And that seems to be a key area that I would actually love to see us actually close above it. And I get a little bit concerned that we continue to reject it.
That 5630, right? That's where you want to ideally close.
Exactly. Yeah, you want to actually try to get above it if possible. If we actually look at the volume chart for today, the reason why is, I mean, we've been rejecting it for the last week and a half. Even when we have days where we open up above it, we actually close below that 5630 level. Even today, where we were almost 14, 15, 16 points ahead of it, we still came back and broke through and knifed down. Now on this chart, what's actually very interesting, once we got to that 5600 level, kind of pushed through, we always like to have around 5 points of wiggle room. We started seeing a consolidation pattern. A couple of hammer candles did show up there at around the 5583, 5584 level, and then we consolidated. What you now want to see is buying activity coming in, taking place, and then once again hitting that 5630 level. I'm just concerned about it. We highlighted it yesterday. I'm going to just continue to kind of harp on it today. The fact that we can't do it and get above that level on a day like today, where Nvidia kind of started off weak, gained some strength in the middle of the day, pretty much everything else was positive on the session, and we still fail, kind of shows that we might be stalling out here a little bit more.
Yeah, it seemed like we had the best setup could ask for this morning. Even kind of starting down is almost like preferable for Nvidia, because then not down too much within range. You get a little push, and then the rest of the market comes with it. And then we fail again. So it's definitely very frustrating here for bulls. The point that you made about the open interest or volume, though, too, is that to the downside, it's not like people are really pressing it. It's not like bears are really pushing it here.
Yeah, so they were basically pushing it between that 5630 level all the way down to 5600. Once we broke through, you didn't see a lot of this activity where individuals are rolling their puts to the downside, trying to get a little bit more aggressive, trying to target, say, the 5570 level. There was a couple of trades that did hit at the 5570, but nothing too concerning, right? And so that is actually a really good sign. That additional pressure when it comes to that put buying, and then also the aggressive price action to the downside is what fuels these dealers that actually have to sell more contracts in order to cover. Because we did not have to have that issue, at least for now, that actually gave us a little bit of an area of support here for now in order for us to kind of stabilize. But we still want to be above 5600, because if we're not and we're below it, we are in negative gamma territory. And that's one of the things that we were talking about offline. We don't really want to open up below negative gamma territory either, because that's usually when we see these flush outs to the downside. So the farther and farther away we can get from 5600 today, especially going in tomorrow for PCE, the better for this market, and maybe we are able to hit all-time highs here.
Well, that's kind of the point tomorrow. I'm glad you bring it up with inflation. if we had just run away today and gotten through 5630 and held it, made a new weekly high, it would seem like then tomorrow becomes a little bit of a non-event, arguably, but now it arguably cannot. You know, it's going to play a role if we come in without any clear direction. Then inflation is back as a catalyst. Like, that's the only thing we got tomorrow.
Well, okay, so let me say this. Tomorrow is actually a really decent setup for bulls if we have a decent PCE print. And here's the reason why. If we could be above 5,600 by the open tomorrow, right? Maybe if we're at 5,630, that would be a good thing. Tomorrow and going into this weekend, we have a holiday. So what are we expecting tomorrow? Actually, low liquidity. From a seasonal standpoint, tomorrow should be one of the lowest volume days that we see in this market. And if you have low volume and you have lack of participants in the market, you can also have lower liquidity. Lower liquidity allows you to push price more, either to the upside or downside. Now, it's an environment where you could actually have a significant sell-off too, but if you have favorable data and the market structure holds in for the most part, this could actually give you that clearance to push to the upside and hit all-time highs. And actually, if we had the same type of price action today to the upside that we would potentially have tomorrow with the lower liquidity, we probably would have broke through all-time highs today. So that's where you actually have a little bit of a bright sign here. If you're a bull, if you can follow through, there won't be as much resistance as a normal week, especially the Friday going into a weekend. So that's one thing. I also have it highlighted here on this chart. I'm going to continue to leave this on here. The 20-period moving average on the 15-minute charts has been a key area of support and resistance. You can see it over the last 5 days. Today, we failed that. And right there at that area where the 20-period moving average is sitting is 56.25. Pretty close to 56 or 56.30. So there's some confluence there at that area.
All right, so then we'll say if we can finish today above that little 56.27 to 30 area, beautiful. Okay, we held on to important gains. Tomorrow, then maybe someone comes in, feels bullish, tries to squeeze it into the weekend, take advantage of low volume on an inflation print day. I'm ready for that. I just want to get out of the range. The only thing I said this week is that Nvidia should hit us out of the range. That was the most confident prediction I made, and so far it's wrong after we got rejected from 56.50. So let's just get through the range. I don't know, whatever way, like a breakdown or break up. I'm ready for a move, KG. Yeah. So maybe it's tomorrow.
I hear you. Real quick, if we don't, and I'm right there with you, and we do see a double top, the only time that I've seen over the last 30 years, if you're looking at a chart, where we've had a scenario over the last 3 months, where we had the 20-day go below the 50-day, which is bearish, come back and actually make new highs, do it again, come back and make new highs or relative highs, get close to it, and fail, is 2007. Now, I'm not saying this is a 2007 event, but I'm telling you that the technicals are setting up to look eerily similar to 2007 and or August and September of last year, where we actually had that October fail.
Okay. All right. Now you scared me a little bit. All right. We'll find out tomorrow. Let's get through one day at a time. We'll see how we respond to inflation. Thanks, Kevin Grain.